everyone, K Kim here with the Traders Club. Today is September 22nd, 2017, Friday. Welcome to the market update. Hope you had a good week trading thus far. Market has been looking at Spider here, S&P 500 ETF. Just been kind of lethargic a little bit, consolidating, tightening up here a little bit. So today we're going to be talking about Spider, Russell 2000 ETF. Qs, banks, and I want to talk about briefly Apple, Tesla, and Amazon today, and we'll call it a day. Looking at Spider here real quick, obviously, let's just look at things in perspective. First, we are still above rising 20 MA, 50 MA still rising, 100 SMA rising, right? We talked about that 20 MA setting. If you're following my moving averages setting at close, it is at close, right? Keep forgetting. Yeah, 20 MA and 100 SMA at high, 50 MA at low, right? So 20 MA at close, 50 MA at low, 100 SMA at high. Those are the settings that I have to monitor minor to intermediate term sentiment here. So as long as we stay above these three moving averages, I would have to say intermediate term sentiment is bullish. As long as we stay above the rising 20 MA, minor term sentiment is bullish. So we're stay above it, so we have to categorize this minor term sentiment is bullish. We're still above the rising 20. We haven't touched it yet. Last time we did find support right here on September 6th or 5th. So right now, what we're seeing is a little bit of consolidation formation here. Looks like a little bit of bull pennant type of pattern. Last time we did form bull pennant right here, and we broke higher. I think on last market update, a few markets update ago, we talked about this pattern, right? We said, well, this is a bull pennant pattern, but sometimes it doesn't play. It doesn't always play out because this was a bull pennant pattern here also that failed, but this time it played out. It's really, I said it last time here, this is a 55-45. 55% chances to move higher or break out to the upside because we're an uptrend, but 45% chance it could pull back. So let's see how that plays out. But if this bull pennant pattern falls to the downside, I given you this level here, 247.98 is the next level of support, or first 248.30, which is coinciding with that 20 MA, and then 247.98, and after that 24.728, and then worst case scenario, this thing coming and filling this gap, or maybe retesting this rising channel support at 246.57. So these are numbers of support should the price slide, and that's really pretty much all the analysis I have on the Spider. All the important analysis I've already done down here. So right now we're just gonna see how it's gonna play out. We're still in an uptrend. Let's see if it kind of consolidates a little bit and before moving higher or pulling back. I don't know if it's gonna move higher, pull back. Let's see how it plays out. But I give benefit of the doubt to the buyers in the minor term as of today, as it holds above the 20 MA, holding above 20 MA still, and forming this potentially bull pennant pattern, which could break on either direction. 55% chance it will break to the upside, 45% chance it will break to the downside. So let's see, let's continue on with the Russell 2000 IWM. Well, welcome to new all-time high on IWM. It hasn't printed, it hasn't closed yet, but at least on an intraday basis, we printed new all-time here. It seemed like just a day ago or yesterday where everybody was freaking out, but man, you gotta love this market. This is the market that you signed up for. Without this kind of shenanigan, it's not a market. I mean, this is how this market operates pretty much all the time. You probably start to see that. So what are we gonna do? And I think a few weeks ago we talked about, even last update, that there's a chance this thing could go pretty much straight up. That's what it said. That's what it pretty much did last couple of weeks here after that just massive bull and bear trap, because it trapped the bears, they went short and got burned. It trapped the bulls because bulls got stopped out and then they got burned. So market took money on both directions and then it brought it back up here. So should the price pull back, let's just give potential scenarios here. Should the price pull back, Next level support likely around 142-ish, 142.60, 142.40-ish. Possibly fill this gap, maybe meet with 20. 20 MA did act as strong support right here on this day, September 8th. You see that 20 MA rising here, rising. So that 20 act as support, so possibly pull back, maybe fill this gap or something like that, this tiny gap before moving higher. That's a likely possible scenario in the minor term perspective. Or this thing could pretty much just keep on grinding higher. It's a possibility. Sooner or later, though, it's going to pull back, though. But it's a possibility it could keep grinding higher with even minor term up and downs or consolidation and whatnot. But let's see how that plays. I think worst case scenario. Let's say just the worst. Let's say Russell 2000 decided one day it's just going to see a huge amount of selling, right? The worst case scenario, we want to see 140 or 139 hold. This is a very important level. This is a mid part of this move. Not only do we have 100 SMA residing in that vicinity. That's a worst case scenario, which I am leaning towards to a scenario that probably not going to be the case. But in the event that if that happens, 140 is a level to watch, 139. But if any shallow pullback, I think 142-ish, 20 MA before going higher. Very bullish. I'm holding all of my positions. I've been buying the dips all throughout. My target is still 155 or so. I've been journaling it, documenting every move. So I will probably update that sometime next week. So let's continue with the Nasdaq. Nasdaq last week we talked about this. This is a rising. This is a rising what? Wedge. I'm sure by this time now, you're hearing about it. You're hearing people talking about this rising wedge. You see, market don't like that. Market don't like when you talk about market like you figured out the market. See, market don't like that. And this is where a lot of people, a lot of so-called experts, or all these different high-following people on StockTwits and Twitter is going to start talking about this rising wedge as a bearish pattern. It is indeed a bearish pattern. It is. I've seen these rising wedge break out to the downside. So, but when market starts to get kind of humiliated in that perspective where, they all talk as if they figured out the market is going to make it tricky. So, this is a rising channel, but I'm going to give benefit of the doubt that this may not play out. What I'm saying is, I don't see Nasdaq seeing a steep correction, like, let's say, 15% or 10%. I think what it could do, we start fizzling, tightening, and attempt to break lower, fake everybody out. A lot of people think that, well, Nasdaq's been up so much, man. This thing needs some good size correction. I think most people think that way, thinking that possibly this thing is going to come all the way down. I think it's going to trap them again. It's going to give them some shenanigans. So that possibly, we're still in an uptrend. So I still want to give benefit of doubt to the buyers in the primary term. That means we may see minor to intermediate term weakness, right? But we may get right back up, or we may get stuck in range for some time. But I'm just getting too ahead of myself. So it's gonna be deeper than just bearish rising wedge. I want you to understand this. So many people are going to start talking, oh yeah, it's a rising wedge, yeah, it's down, I'm going to keep shorting, we're going to go to 120. That's probably not going to happen. But there's a chance we may refill this level or retest this level. We do have a gap that hasn't been filled right here. You see this gap? Okay. There's a chance that it's going to, let's mark that. Let's mark this gap right here. Okay. Chance that that it's gonna appear to be broken below and this rising wedge playing out and come down and fill this gap, or maybe retest that gap up level. Also keep in mind we have rising primary term. Let's make this red because that's coming all the way from bottom. Let's make that red. Actually, let's not make that dotted, but solid line. This is coming all the way bottom here too. So we have a lot of support here. So I still want to give benefit of the doubt to the buyers in the primary term to intermediate term, but minor to intermediate term. We may see some shakeout here. We are starting to see some bearish divergence on the weekly. It's grinding, but let's see how that plays out. We lost 20, but remember last time 50 active supports, or 50 is guarding this channel support right there. This kind of rising wedge support actually, and then we got the 100 right at that level, also 100 at that support right here. 200s. I think the worst case scenario potentially comes down to retest 200. Remember, Spider and the Dow has not yet retested 200 SMA yet. Russell did, banks did, the bank sector, and the transport did. Semis, Nasdaq, and Spider, S&P, and Dow has not yet. So maybe there's some rotation going on here. I think sooner or later, S&P and Dow will retest 200 SMA, maybe next year. I don't see it happening this year, though, on the S&P and the Dow. But I think Nasdaq, there's a chance. I think this is probably going to be the worst case scenario, is that this incoming maybe retest this level, maybe somewhere here. If that happens, that will be I think, a pretty good level to buy the dip, in my opinion. But again, let's not get ahead of ourselves. We will follow up on this next week on a weekly basis, and we'll talk about it, and we'll go from there, right? Bank sector. Yeah, bank sector. So basically, we had that rising uptrend support there, horizontal pivot, and then 200 SMA all in that vicinity. We threw a bullish belt hold. We got a follow through, gap up, and then we're just pretty much seeing pretty much straight up move. Something that I talk a lot about in these videos, and my YouTube followers, my StockTwits follower, Twitter follower, and my members know this, is that shake and bake is the catalyst. Shake and bake is the catalyst. When this market or stock starts to move right like this, what it needs is a new fresh of supplies. Sometimes, once in a while, you find some stocks that just go, or some index. But more than likely, what it's going to do, it's going to see a pullback and some shake and bake, some shakeout, because it requires new fresh of supply so then it can actually move to the next move. That's what we call what? An uptrend, goes up, comes down, but when it comes down, it doesn't come all the way down. It stops short in the middle, and it goes back up. It comes down, but it doesn't come all the way down. It stops short, cultivates a higher low, and then goes up. That's what we call higher lows and higher highs. This is a very, very basic of technical analysis, yet nobody understands this. Because when the market's shaking back, everybody's just freaking out, right? Let's go to Apple here, and this is something that I've been talking about on Apple some time. I think last week or a few weeks ago, this bearish divergence is a concerning matter here. I'm planning on writing a full report on this, so I'll just take this briefly here. We got the bearish divergence here. And last time when I mentioned this, we didn't have this. Okay, we didn't have that red line and blue line crossing like that. So now we have initial confirmation on MACD. We don't have a full confirmation on price action yet. Full confirmation on price action is breaking below the recent low, which is about 143-ish. If that happens, that's a full count. There's a chance maybe you can do something like this and continue lower, because Apple tends to like to do that, right? Right here, right there. You see right there, we got the left shoulder head, right shoulder after bearish divergence, and right here, left shoulder head, triple top head, and right shoulder, and right there, potentially do that, boom. And also another moving average I want you to keep an eye on, and I'll put all this in my special report or article that I'm going to be writing possibly this weekend, is that the 20 MA on this weekly chart, right? You can see that 20 MA, boom, acting as resistance, sell. And 20 MA, boom. We attempt to go above the 20 MA, got rejected, fake out, shenanigan. But if we just draw this downtrend resistance, bam, right? With the weekly bearish divergence, right? Sell came down. So now boom, right? This thing comes down, 20 MA goes up, and go hit it, maybe get a little bit higher, whatever, so you can understand. Make sure that you don't get faked out to the upside, and then comes down, sell. So those are the ones that we're gonna have to keep an eye on, and we'll follow up on that, but I'll write an article this week. Two more, I'll let you guys go. Tesla. Tesla, we had a potentially head and shoulder formation. That has been nullified. That's a good sign. But what we're seeing right now is we are seeing potentially it's still a premature stage, but we got the equal high here. We got a little bit of bearish divergence playing out. I think did we have anything? I think right there. So it was a little bit of a that was much stronger though. This was much stronger than this. So I can't call it at this point that this thing is ready to steeper decline though, but we have some strong levels of support. We broke that one. It's right here. And we got that 150 colliding right here together. They're pretty much moving together. 150 right there, and then that is where active strong support. So that's the next level of support. So what we want to see is this thing mostly consolidating before moving higher. If we do lose that, next level of support is this rising neckline, right? So those are the levels to watch. One last one, let you guys go. Amazon. I think Amazon has been a big talk for a while. Amazon had some good move, man. So I mean, this is not a bad sign. I mean, after this kind of huge move, I mean, if I was accumulating stocks here and I saw that move, I would distribute some stocks too. So this is totally normal after this kind of a huge move here, but we do have a big monthly shooting star candle there. And we're so far seeing a little bit of follow through, but really we can still look at this as consolidation, really like a bull pennant type of pattern. We could still look at that as that unless this thing breaks lower, right? So a second. So as I look at this, I know what everybody's going to start talking about. This head and shoulder formation, that's what everybody's going to be talking about. Market don't like that. Market don't like when you talk about the market like you know or you figured out the market. So there's a few things I want you to know. I'm going to give you a little bit of bullish case. This right here, this is uptrend support coming all the way from 2016 November, right? Bullish case might be here. Let me put this right there, 1,000 level, where we found resistance. Left shoulder, head, right shoulder, in potentially invert head and shoulders to nullify this big head and shoulders. If this thing breaks lower and makes new low, then this head and shoulder is probably going to play out potentially, and then if we get rejected and continue, then we may come back to 846, or no, not 846, 900. No, actually, you know what, let me take that back. We got gap fill here, so we gotta watch out where there could be shenanigan where come and fill this gap and make it look like it's breaking below and giving you that, you know, breaking below the neckline. The head and shoulder is gonna play out, and then it just goes right back up and do this and go up higher. This is why it is extremely difficult to show and trying to time this to maybe fall back to 846. So really, for that to happen, not only this thing has to break below 938-ish, it would have to come and fill this gap, and then probably going to find support at 200 SMA here. You see at 200 SMA? And then we're probably going to find support where it's going to move higher. But when it moves higher, what you want to see is you want to see this thing cultivating lower high, maybe get rejected on this rising uptrend support, and then get rejected and fall back. Then we probably going to see 846, 83. However, what could possibly happen is come down, hit the 200 SMA, fill this gap, traps everybody, get up, maybe even go straight. How many times we seen shenanigan like that? Market don't like it when you think you figured it out just with them stupid patterns. You see, this is where all these stupid articles are gonna start talking about Yahoo Finance or all these different so-called publications. Oh, CNBC, some guy's gonna come out and they're gonna draw with their finger. Oh yeah, you see the invert head and shoulder pattern. Oh yeah, it's not that easy. Just because there's a pattern doesn't mean it's always going to play out. So you got, these are the level that I just explained to you. We got this gap, we got that 200 SMA, we got this horizontal pivot, we got this. So there's a lot to think about. Okay, so, well, that's it for me. Have a wonderful weekend. Good luck trading next week.